Ever feel like crypto trading is a high-stakes game of chess, and your exchange is the chessboard? What if that chessboard has hidden traps, wobbly legs, and a few pieces that are about to fall off? That's what we're here to talk about today. We're going deep into the world of crypto trading on a platform you might have heard of, Newton. And we're not here to sing its praises. We're here to expose the risks you might not even know you're taking. You see, a lot of people get into crypto with stars in their eyes. They hear stories of overnight millionaires, of life-changing gains, and they're ready to dive in. But they often don't stop to ask the most important question: what's the worst that can happen? When you're using a platform like Newton, or any exchange for that matter, understanding the what-ifs is not just smart, it's essential for protecting your hard-earned money. Newton markets itself as a simple, low-fee platform, especially for Canadians. And on the surface, it seems great. A clean interface, easy deposits, and a decent selection of coins. But the devil, as they say, is in the details. And the details, in this case, are the potential risks lurking beneath the surface. So let's pull back the curtain and look at the real-world dangers of using Newton for your crypto trading. The first major risk, and one that often catches new traders off guard, is the issue of liquidity and price slippage. Newton, like many exchanges, makes its money on the spread, the difference between the price you can buy a crypto at and the price you can sell it for. They claim to have tight spreads, but this isn't always the case, especially with less popular altcoins. You might see a price on the chart, but when you go to place a large order, the actual price you get could be significantly worse. This is known as slippage, and it's a hidden fee that can eat into your profits, especially during periods of high market volatility. You think you're getting a great deal, but in reality, you are paying a premium that you can't even see. For a day trader or someone executing large trades, this can be a huge problem. You could lose a substantial chunk of your potential profit before you even begin to trade. This leads us to the next big risk: the limited order types and lack of advanced trading tools. Newton is designed for simplicity, which is great for beginners. But for anyone looking to employ more sophisticated trading strategies, it's a major limitation. You're essentially restricted to market and limit orders. There's no margin trading, no stop-loss orders to automatically protect you from a sudden market crash, and no take-profit orders to lock in gains. This forces traders to constantly monitor their positions, which is not only stressful but also incredibly impractical. In the fast-paced, 24/7 world of crypto, not having these tools is like trying to race a Formula One car without a steering wheel. You're at the mercy of the market, and one wrong turn can be catastrophic. A sudden dip while you're asleep could wipe out your entire portfolio, and you'd have no automated safety net to save you. Now let's talk about the single most critical aspect of any crypto exchange: security. Newton has a decent track record and claims to use industry best practices like storing the majority of assets in cold storage. They also require two-factor authentication. These are good things. But it's crucial to remember that no centralized exchange is 100% immune to risk. You are trusting a third party with your funds. And if that third party gets hacked, goes bankrupt, or faces a regulatory crackdown, your assets could be at risk. We've seen this happen time and time again in the crypto space, from the infamous Quadraga-CX scandal to the collapse of FTX. Newton is a Canadian-based company, which provides some regulatory oversight from bodies like the Canadian Securities Administrators. But it's not the same as having your funds insured by a government agency like the FDIC for bank deposits. The Canadian Investor Protection Fund, for example, does not cover crypto assets. If Newton were to fail, you could be left with nothing. This risk is compounded by the issues many users have reported with withdrawals. We've seen numerous complaints online about delayed or blocked withdrawals. Users have reported waiting for days, or even weeks, to get their funds out. While some of these delays might be due to security checks, the lack of communication and transparency from customer support can be alarming. Imagine needing to pull out your funds quickly during a market downturn to minimize your losses, only to find your withdrawal is pending with no end in sight. This kind of platform risk is a huge red flag for any serious trader. You need to be able to move your assets when you want to, not when the exchange decides it's convenient. And that brings us to the elephant in the room, customer support. The reviews for Newton's customer support are, to put it mildly, a mixed bag. Many users report that support is slow, unhelpful, or completely non-existent. The lack of a live phone or chat option means you're often left to the mercy of email tickets, with long response times and generic, bot-like answers. When you're dealing with potentially large sums of money, and something goes wrong, you need to know you can reach a real person who can help you resolve the issue. Waiting days for a response while your funds are locked or a trade is going sideways is unacceptable. This poor customer support is a significant risk factor, as it means you're on your own when a problem arises. Finally, we have the general platform risks that aren't specific to Newton but are still critical to consider. The platform is not affiliated with similarly named projects or tokens, like the Newton protocol. This is a minor but important detail that can lead to confusion and potential scams for unwary users. Always double-check the project you're investing in. Furthermore, while the platform is regulated in Canada, it's not a global exchange. This limits its reach and could be a problem if you're traveling or living outside of Canada. You might be locked out of your account or unable to trade. So, what's the takeaway here? Is Newton a terrible exchange? Not necessarily. For a brand new Canadian user who just wants to buy a small amount of Bitcoin or Ethereum and hold it for the long term, it might be perfectly fine. But for anyone who considers themselves a serious trader, or who is planning to trade frequently with larger sums, the risks are substantial. The limited trading tools, the potential for hidden fees and slippage, the history of withdrawal delays, and the reported issues with customer support are all factors that should give you pause. You have to ask yourself if the simplicity and the no-fee marketing are worth the risks. For a seasoned trader, the answer is almost certainly no. There are other exchanges out there with better liquidity, more advanced features, and a more robust support system, even if they have slightly higher fees. Ultimately, your choice of exchange is one of the most important decisions you'll make in your crypto journey. It's the foundation of your entire trading strategy. And if that foundation is shaky, everything you build on top of it is at risk of collapse. Do your own research, read the fine print, and don't be swayed by clever marketing. Understand the risks before you commit your capital. With that said, thanks for watching and until next time.